So I have started the recording, and let me know if you have any problem with that. I have. Um, okay. A very good morning. Good afternoon to everybody. Um, uh, I would like to welcome everyone to the third webinar in our Climate and Disaster Risk Finance and Insurance webinar series. I'm glad to see so many participants joining us in today's webinar. I also see we have some participants joining us from our previous session, as well as new participants that are with us today. For those who were not with us the last time, just a quick recap. Briefly outlining what this webinar is all about. I hope you can see my screen at the moment. Yes. So over the course of 3 sessions, we are diving deep into different topics related to climate and disaster risk finance and insurance, or CDRFI in short. In the first webinar, we introduced the foundational concepts and principles of CDRFI. We also explored various instruments and emphasized the importance of pro-poor and gender-sensitive approaches. Further, in our second session, we discussed on how CDRFI is integrated into national policies and practices. We also looked at how civil society can engage as an entry point in developing and implementing these frameworks. And today in our third session, we will discuss about different initiatives that has been implementing in Pakistan for strengthening climate adaptation and resilience, which also including the different benefits and some implementation challenges that the countries face when implementing certain CDRFI instruments such as climate risk insurance programs or others. Now, to give you a sense of how these sessions are being structured, here is a quick recap. This webinar series consisted of 3 sessions, and we featured different guest speakers who joined us to give an insights on different topics that we talked previously. We encourage, if you have any questions regarding the presentations that are, if you have any questions to the speaker, we encourage you to post any questions in the chat. We will try to make it as interactive as possible. But also we have dedicated question and answer sessions after each of the presentation. So we would highly encourage you to have a discussion in the chat as well with speakers or with each others, depending on your expertise as well. You can access the QR code here. Since we also provide a certificate of participation for the participant who joined at least 2 of the webinars. For this, I would like to ask you to register. Here is the QR code. However, I would share it with you again at the end of the session. So please, you can fill in the registration afterwards as well. Yes. So just to give a brief overview before we dive into the main session, I would like to start with the current landscape of climate risk and financing in Pakistan. As we all know that Pakistan is consistently ranked among the most climate vulnerable countries in the world, facing recurrent floods or droughts and many other extreme events. The resultant impact accounts to millions of people being affected, and with damages running into billions of dollars. However, the challenge here is not only the scale of losses, but also the financial resilience gap. To meet the resilience and emission reduction needs against climate change, Pakistan requires about 350 billion US dollar by 2030. Against this, that climate finance inflows in Pakistan, however, is somewhat around $4 billion annually, which shows a financing gap, and also insurance coverage is very limited as well. So these are some estimations presenting that most of the households in the countries are unprotected, as well as the people and other infrastructures. There is, however, some important momentum in the country, as we also discussed in our previous session, that Pakistan was one of the first country in Asia to access the Global Shield support, which aimed to close these protection gaps through different pre-arranged finance. Also, some of the priority efforts focus on safeguarding infrastructures, extending insurance to farmers, and building a social protection system in the country. And today we will further discuss on different programs and initiatives that are being implemented in the country for building climate resilience. Next, we have the agenda for today's session, and today, as I mentioned already, that we are going deeper into CDRFI topic, reflecting on different programs for building climate and financial resilience, particularly against climate risk. And here are the objectives of the webinar today to see what we aim to cover. Throughout the session, we will be sharing different insights and lessons learned from national initiatives or regional initiatives on CDRFI programs, showcasing the opportunities for scaling financial protection. We will also discuss about different benefits and implementation challenges in implementing CDRFI instruments in the country. And today I'm delighted to have two of our speakers joining us. First we have Ms. Khadija Bano joining us from GIZ Pakistan. We also have Abbas Ali from Karakoram Area Development Organization, who have been supporting GIZ in implementing the climate resilience project. Next, we have Sana Ehsan from United Nations Development Program. She has been leading the insurance and risk finance work of UNDP in Pakistan. A very warm welcome to both of our speakers and the colleagues joining us who have been supporting the great work they've been doing in the country. So before we start our main session, I would like to see where our perspective lies and what knowledge we already have from different experiences that we have. So I have a short exercise here for you. It's just a couple of questions in Mentimeter, and after that we will start our main session. Could you join the Mentimeter? Okay, so yes, if you could join the Mentimeter, could you give me a thumbs up here? I could see 3 of the participants have been already able to join. I see it increasing. Okay, can you post the QR code again? The QR code is also in the screen. Could you see the code here?
Yes, we can see it now. It was gone for a second.
Okay. Okay, are we expecting more participants to join? I could only see 13 people who have joined so far. Okay. We also have some new participants joining. Um, just to give you an overview of what we've been doing for the new participants who just joined. We are starting with a small Mentimeter exercise. Uh, okay, just give me a moment. Mm. Yes, so I would start with the first question now. As we all know that Pakistan is known to have many hazards that the country suffers from. So I have a list of couple of hazards here, depending on what could be the most significant and long-term threat in terms of hazard. You can just like slide from strongly agreeing to strongly disagreeing, so as to understand what is the most common hazard in the country or what would be the one that has least effect. So I could see here riverine flood is being considered the most significant hazards with long-term threat. Here, okay, so I could see there are other hazards as well that's affecting the country. However, this is just to see an overview of what is considered as the most significant ones, or what is the extent with which the hazard is affecting the country. Uh, okay, so shall I move to another question, or are we still expecting some answers? So here it does not mean that droughts or tropical cyclones are not hazard or they have less effect, but more to understand which hazard is affecting or have more significant impact. Okay, so I would move to another question. So this is also a brief recap from our previous sessions, if you still remember what we talked about before. So I have here three statements that talks about how poverty affects climate hazards. So first says poverty drives climate hazards, ending poverty is key to stopping future climate change. Second is poverty and natural hazard risk worsens each other in a cycle. And the third is risk from natural hazards depend on vulnerability but not poverty. So here only one answer is correct. So which do you think is the correct answer? Okay, I have some answers already here, and I'm so glad to see everybody participating as well. Okay. So indeed, poverty and natural hazards, they are interlinked with each other, whereas poverty, because of economic conditions, people have problems adapting to certain hazards when they hit the country, and it's after any hazard, the impact definitely increases the poverty and economic condition in any region. So that would be the correct answer, and thank you so much for participating. And I have one final question. So as we know that disaster happens and there is a lot of impacts after the disaster, but who should play the leading role in financing disaster recovery in countries or in Pakistan? Should it be the government or insurance companies, or should it be international donor assistance or community-based saving? So here it's not a right or wrong answer, but it's more like what you think about certain statement. Um, Yes, so definitely this is more to understand what are the different perspective of our audience, and we will discuss more in these topics during our presentations and discussion sessions. I will give a couple of seconds for all the participants to answer the question, and after that we will start with our main session. Okay. Okay, so thank you so much, everybody. So I hope everybody is warmed up and ready for our intense or very productive discussion that we will be having now. And thank you so much for joining the Mentimeter. And now for our first presentation, I would like to invite Ms. Khadija Bano, and she's with us here today already. And I would just share my screen. Yes. So yes, so Khadija Bano is here with us already, and yes, the floor is yours. Please go ahead. Yes.
Hello, Assalamu alaikum, and good afternoon. Greeting from Pakistan, from Khyber Pakhtunkhwa. Thank you so much, UNU team, and especially Uzabi, for inviting us for this insightful discussion. And I truly appreciate the efforts put together into designing the entire webinars series on CDRFI initiative. Being a part of the full series, I found the sessions highly informative and practicals and offering valuable insight to the further implementation CDRF initiatives in local context of Pakistan. Um, in our previous webinar discussions, we suggested to present some local cases and local adaptation solutions in context of CDRFI to this webinar series. So under the SAR project, basically I am representing working in GIZ's Strengthening Climate Adaptation Resilience Project as a technical advisor climate adaptation and resilience, and I am based in Khyber Pakhtunkhwa. So under SAR projects, we have been focusing on strengthening climate action for resilience and risk management in Pakistan, and we have a specific outputs on specific input on climate actions for resilience and risk management in Pakistan, and building the strengthening and planning and financing capacities of climate adaptation and resilience, as well as climate risk management mayor in province of Khyber Pakhtunkhwa and Punjab. So achieving this output and results under SAR project, we have been, did some scoping studies, and we have some implementation agreement with local partner. So GIZ have introduced innovative financing mechanism which will strengthen financing resilience against climate risk in Pakistan while exploring the pathway to make the CDRFI solutions more practical. So under this CDRFI initiatives, SAR project have signed the grant agreements with the local partners. You can next slide. Um, our local partners on the grounds in collaboration with CARDO, Karakoram Area Development Organization, Rural Aid MS Worldwide, and SRSP. So let me share with you, like for this in-depth, insightful discussions and bring you some flavor of the implementation realities on the CDRFI initiatives. I have also invited our representative from the CARDO side, CEO, Mr. Abbas Ali will be here for some further discussions and some technical discussions. For the rural aid projects, Mr. Sajad is also a part of the webinars, and for SRSP discussion, their technical teams and the program manager, Ms. Nadia, she's around in the webinar and she can, answer if you have some further questions. The CARDO have implemented a CDRFI project named Enhancing Climate Resilience through Index-Based Community Climate Risk Insurance in Upper Chitral and Khyber Pakhtunkhwa, whereas Rural Aid MS Worldwide have implemented a project named Empowering Small Scale Farmer through community-based drone for a climate resilience agriculture and microfinancing in district Nowshera. Whereas SRSP project implemented a project climate adaptation risk financing project in district Charsada and Nowshera. GIZ, in collaboration with these three local partners, have implemented the successful project, and all three projects have been completed. CARDO and SRSP were the short-term project of around 9 month to 10-month project, whereas SRSP was around 2-year project. So during these short-term projects, we have, come up with some tangible results and solutions. I have introduced CDRFI at the grassroots level. So apart from these local interventions, and in light of National Disaster Risk Financing Strategy and National Disaster Risk Management Funds, these projects have been elaborated and implemented. So apart from this, under the Energy and Climate Change Cluster, GIZ have stand-alone project. We call it CRF project, Climate Risk Financing Project, that putting efforts with aggregators such as microfinance institutions, farmer cooperatives, agri-tech companies to develop and pilot the insurance product that protects smallholder farmers against extreme weather losses. So this is our ongoing project, and we are working with public-private partnerships, and so and so. In addition to that, why I'm sharing this information, because SAR projects look into the other projects experiences and try to integrate those experiences and learning into our own local projects. Whereas if I mentioned World Food Programs, meanwhile have introduced the concept of forecast-based financing and anticipatory action in Pakistan in context of the humanitarian system, whereas UNDP and Islamic Development Bank jointly examines the how the kafal and Islamic insurance can be leveraged for the climate risk, resulting in recommendations to align the risk financing with the local culture and religious values. And the other donors like KfW and USAID have contributed to risk financing indirectly by funding social safety nets and community resilient funds that act as a disaster buffer, like Benazir Income Support Program, and our other one of our other GIZ sister project like Adaptive Social Protection Program. They are also working on this, financial solutions and safety nets on the ground. In coming slide, I will briefly give you some insight on the implementing partner projects. Please go to the next slide. Let me start with the CARDO. Yes, CARDO have the CARDO product note basically was index-based community climate risk insurance, which is basically already implemented in Punjab as a YIIE with the different collaborators and within partners. The CARDO, in collaboration with Salam Takaful, has developed an innovative, first of its kind product to ensure a small holder farmers in mountain regions against agriculture vulnerability and climate risk. This product note have key features, and they focused on wheat and apple orchards. As I mentioned, that was a 9 to 10-month project, so we focus only two crops. Claim triggered by ERF5 rainfall data, no manual loss assessment, direct payouts to the farmers, fast recovery and reduced vulnerability. This product have these kind of features: mid-season payout to ease financial strain, transparent and farm-specific coverage provided, digital integration via Salam apps and Informer apps, and calamity bundles, 50% of payout if possesses occur without index triggers. So this Salam Tukafal Limited has extended Sharia compliant parametric insurance so that community can own it and accept this intervention. Next slide. CARDO targeted two union council and in selected 9 villages and worked with around 300 households. And as I mentioned earlier, the two crops was selected, apple orchards and wheat, and identified cultivated land covering around 2,000 canals, and insurance policies was registered for 508 policyholders, and out of 508 policyholders, 100 have already received the policy on local setting. So series of the trainings and on insurance literacy to gain the trust. There are around 21 CDRFI community awareness sessions and training session involving total of around 800 members, male and from whereas 468 males and 304 females have participated in Brown. Yes, in district Chitral, in Upper Chitral, this project have been implemented. The projects that was a short term projects, and we have lots of lesson learned and challenges. So one of the lesson learned of this project was about we have engaged early stakeholder engagements with multiple stakeholders like LSOs, NGOs, government organizations, recipients to enhance the capacity building initiatives. This introduction of the contextualized climate insurance product have in Upper Chitral, really that was the first time providing financial protection for the small farmer against the climate induced losses. Engaging this Sharia compliant insurance provider proved essentials in ensuring the cultural and religious aligned, which significantly increase the farmers' participation. So the targeted insurance product development programs, especially for the women's, are essentials to improve the economic opportunities and strengthen resilience against a climate-induced livelihood. So integrating insurance with the supply chain, value addition, food processing enterprises will ensure the long-term sustainabilities, and the stronger coordination mechanism and extended post-project supports are needed to ensure the timely payout. In our case, like this Pakistan insurance market is relatively small, but it's gradually evolving to offer a products for disaster and climate risk, often with support from the microfinancing and technology. This Sharia, or in addition to that, Sharia compliant parametric insurance for the Salam Takaful products pay farmer if certain weather triggers are hit. So these kind of lesson learned we had in CARDOS. So there remains challenges while implementing this index-based agriculture insurance instrument. Low awareness and the trust, the farmer and the vulnerable household often see insurance as a premier loss if no disaster occurs. Affordability in terms of high upfront premium offered for the poor and non-landowners, restrict uptakes, limited data systems, like effective risk financing requires the robust data on hazard exposures, vulnerability, and post losses to price risk and design triggers. So that was a great challenge. And Salam Takaful project to register a farmer remains incomplete due to the Cordo project ended and limited accessibility and outreach of the insurance companies, because like at the moment, the Salam Takaful is focusing on the Punjab due to the recent floods and recent ongoing risk in the Punjab, and they do not have outreach to our upper Chitral areas. There are some challenges related to the policy gaps. No fully institutionalized CDRFI framework and model within national and provincial climate adaptation strategies in context of KP. I'm referring to that. No? So at the end, in summary, while Pakistan is making strides in CDRFI, these challenges underline that it is a long-term agenda, requires structural changes. The country must work simultaneously on improving financial literacy, trust at community level, strengthening regulatory and development works, data frameworks, building technical capacities of institutions, ensuring funding domestic or international fund to backstop the new risk financing instruments. And each challenge is being addressed gradually. For example, the COFL offering directly tackle religious concern, mobile and payment tech is expanding outreach, and donor-backed models are helping and demonstrate viability, but significant gap remains on the road to comprehensive and sustainability CDRFI ecosystem. Let me give you another pilot example from SAR as JZ SAR project. With the support of the SRSP, as I mentioned in earlier, they implemented a CDRF initiative on the project financial instrument under strengthening climate adaptation and resilience. So they use climate smart fund, that is a combination of revolving fund and contingency funds for the women group. So this community level and gender inclusive practices approaches are crucial for making CDFI effective at grassroots level in Pakistan. Many rural communities have rich traditions of collective support and informal risk sharing, which modern CDRFI efforts can learn from or leverage. So SRSP have a very best example in that regard. This SRSP CIF initiatives, this village bank concept, please change the slides. No, now we have started the SRSP. Let go now. Go next. Go next.
Okay.
Go next. Sorry, I did not notice like slides are not being moving. Next. Yes. SRSP implemented the projects, this village bank projects, and each village bank has been entitled for the 2 millions under the climate smart funds. They worked in 9 union council and 2 districts. In district Charsada, they had established 8 village banks, 114 COS, and around 3,000 membership. And in district Nushaira, they established 3 village banks, around 49 COS and 1,400 memberships. Next slide. SRSP under their project carried out training, no back. SRSP in their project have carried out a series of training and awareness raising sessions on this CIF literacy, organized DOT for the CEWs and the management of the climate smart funds, training of the village banks on management of the climate smart funds, training of the CSF clients, adaptation and risk financing, training of the communities and climate adaptation, awareness sessions, community training and developing CBDRM plans. So the beneficiary must have to attend these series of the training so that they will be able to adapt these in their at grassroots level. So next slide. This slide reflects the climate investment fund cycle, like how it works at the local level. This climate investment loans and this execution process start with appraisal. The village banks approves and trainings on the climate adaptations, and then transfer by the SRSP technical teams and then disperse to the beneficiaries for next step. Go to the next slide. At the same time, each village bank was entitled to have this contingent fund. And this slide explain you the execution process. Again, it is a grant and the community is not required to repay it. Contingent fund is reserved for post-disaster situation, enabling community to address the urgent needs arising from such circumstances. The target groups is from 0 to 23 disaster-affected household. By the time disaster hit, our village bank decide to prepare for an upcoming disaster. So this is again the cycle of this contingent fund, which is 0.5 out of the 2 million for each village bank. This cycle starts from when the disaster hit. It is notified by the government. Then the banks do the need assessment and need identification. The village bank approves that contingent fund. SRSP technical team implement support, and then fund is dispersed to the particular community that is hit by the disaster. Next slide. Okay. SRSP CIF project have some lesson learned. Like, let me start with a quote from a woman voices. Like, before this fund, I had no say in the family finances. Now I run my own shop and contribute more than ever. This is a CIF beneficiaries in Chersa, who was the direct beneficiary of this CIF fund. So the lesson learned, like women centering community driven approaches works, empowering women with finance and skill build climate resilient at grassroots level. This integration of the finance with training is crucial. Loans coupled with financial literacy, business skills, and climate adaptation training ensure effective use. So here, SRSP have ensured the women skill development training. They have engaged them in this vocational trainings in climate smart agriculture practices. They provided them nurseries and yes, field farmer school approaches and so activities at the ground level. When it comes to this emergency funds, this reduced the negative coping, and contingent funds provided a rapid and effective support during the flood, avoiding debit traps. Trust, transparency, and local ownership sustain model. Women leadership and democratic governance make the village bank model self-sustaining. And most of the cases we have seen, like CDRF initiatives are donor driven, and by the time the donor is not in your bag, these initiatives, somehow not sustained. So in case of SRSP, this is a sustainable model. So knowledge spread beyond the direct members. Trained women share climate knowledge with the neighboring and have multiplying effect, project impact in their communities. And community institutions can evolve into the platform not only for the finance, but also for the disaster risk reduction and environmental action and local governance. Next slide. So this scaling up these grassroots successes and linking them with formal insurance and government program remains a work in progress, but they provide a valuable lesson for inclusive CDRFI initiatives. This sometimes there are some challenges like limited fund size. The contingent funds were helpful, but too small for the large scale recovery need, like in Nushera, have hit by the floods and this heat wave. So this contingent funds was very low. Loan amount and sometimes insufficient for the bigger investment. The women requested a larger loan ceiling, like each beneficiary receive around 50,000, where 5,000 is was administrative for processing costs. So sometimes it was not adequate amount. There are some cultural barrier persist, like restrictive norms still limit some women's participation in the leaderships. Ongoing climate risk, floods, heat wave, and crop losses threatens financial stability and highlighting needs for insurance and larger safety nets. So in conclusion, the Pakistan context revealed that CDRFI is the most effective when it is comprehensive, inclusive, embedded in broader resilience planning. The country's evolving mix of strategy from sovereign risk funds to microinsurance, from forecast-based action to the kafal, and illustrate a toolbox approach, which each tool has its place. While changes persist, Pakistan effort have yielded a pioneer example for South Asia of how to finance a disaster risk in a way that protects both government budgets and vulnerable communities. By continuing to refine these approaches, invest in capacity, and foster public-private community partnerships, Pakistan is gradually building a financial shield against next climate and disaster shocks, providing a valuable lesson for other climate-threatened nations in this process. Here, I will, I have already explained in this slide, like how this toolbox approach can only enable Pakistan to, adapt the CDRFI initiatives and work in collaboration manner. So on this, I will end my presentation. So if you have some questions, I have my implementing partners representative, so you can ask.
Uh,
Thank you so much for listening and being there.
Yes, thank you so much, Khadija Banu, for your presentation. So I would open the floor for questions and answers for next 10 minutes, 10 to 15 minutes. So if you have any question, I see some participants want to ask some question. Yes, the presentation will be shared. So if you have certain question, you can turn on your mic and you can start asking. Okay. Yes, I see a hand. So Shidi Emenike. Sorry if I pronounce your name correctly. Could you please introduce yourself and ask the question, please?
Okay, can you hear me?
Yes,
Good
yes.
afternoon. Yeah, good afternoon. Thank you very much for the insightful presentation. So I just have some couple of questions. The first one is talking about the CIF execution and payment process. The speaker spoke about the different things involved, right from the disaster hit to when the fund is disbursed. I also noticed that there's like informing the local government and other stuffs. And I know that one common problem in global South countries is the effectiveness of some of those government parastatals. So my question is, what is the average time from when the disaster hit to when the local government is notified to when the funds is disbursed? And don't you think that if it's too long, that it might also be like a discouraging factor for some of those small scale farmers? My last question is on measuring the long term impact of some of the CDFRI schemes in Pakistan. So specifically, I want to know if, like, what are the metrics for measuring the long-term impact of some of these projects? Are you using things like if there's, for example, increase in adaptive project, or for example, if there's reduction in the number of small-scale farmers that depend on the aid for some of these projects as one of the yardstick for measuring the long-term success or impact of the project? Thank you.
Thank you. Thank you so much. I would request SRSP representative to respond to this when disaster hit, how community use this contingent fund and CIF funds.
Hi, thank you. So this is Nadia from SRSP. Thank you for the question. Well, let me just very quickly explain that this model that we have used for the climate risk disaster fund has been there for more than 15 years. We've been using this model for poverty reduction. So it's a grant amount which is given to a group of women, and then they are helped, their capacities are built to use that fund to give it out to women who want to set up small businesses. And why do we do this? Because the typical microfinance model does not work in our part of the world. And that is because, it has interest, and interest is considered un-Islamic. So this is an indigenous model that SRSP has come up, where a grant amount is given to a community group of women, and then they're helped to run it and to manage it. And for all these years that this model has run, it has been run for poverty reduction. Under SAR, we picked up the same model, but we made some modifications to introduce it as a climate risk financing model. So there is one module of it which is revolved by the community according to the model that we have in the communities for poverty reduction. And the other part is where a certain amount is placed in the bank. It is not used until a disaster hits that village. So it is very much a grant that belongs to the community. The community can define what are its purposes. And if there is a disaster, the community can avail that fund without waiting for any local government or any formal institution coming in with formal structures to tell them, you have to do this or you have to do that. Why? Because we prepare them all along that process. If there is a disaster, how would you use this grant? So they don't really have to wait for an external to come and tell them that now they can use the grant. The grant very much belongs to them. Yes, SRSP is a joint signatory, and why we are a joint signatory? Because we just want to, have that monitoring role. But the entire empowerment is shifted to the community, to the women's group to use that fund. And as far as the impact assessment is concerned, if you want, we can share our impact assessments that we've done, but you can also visit our website, SRSP's website, and you'll see a lot of assessments that we've done of this model. There are a few that have been done externally. There are a few that are done very regularly on, internally as well by our monitoring and evaluation teams. Also, this model was picked up by UNDP in the past 2 years. They've helped us expand this model to some of the flood affected districts, that's Swat and Nowshera. Thank you. If there are further questions, we can answer them.
Yes, I think that pretty much answers the question. Thank you so much for the insights on this topic. We have another hand raised. I can see Khadija Abdeed. Would you like to present your questions?
Yeah, thank you so much for the opportunity. Just wanted to know the discussion that we were doing. Any of the part of the CDRFI is that we use GIZ, UNDP or SRSP, use it for ex ante finance? Anything on the anticipatory action forecast based financing, or it's all post disasters, as the lady over here were mentioning that they do not have an access to those funding unless and until the disaster hit in those areas. So in my opinion, it's more like an impact based, anything on the forecast related incidents, any ex ante arrangement that you have done during this project. We'd love to hear any lesson learned if you have.
Khadija, if I can take that quickly from the perspective of CIF. So as I said, it has two modules. One is the contingent fund, which is obviously the post-disaster component of it. The other is where the fund gives out grants or loans to women in the communities who want to make their businesses more environment friendly and make them climate sensitive. So that's the kind of things that they are able to do with the revolving fund, which is available to them throughout the year. So they don't really have to wait for a disaster to hit or for a certain particular time. But if they have an enterprise, a business where they want to improve their environmental footprint or they want to expand it, then they can avail that revolving fund portion of it.
Okay. Yeah, thank you so much for your answer. We have one more. Maybe after that we will start with our next presentation, and if you have further question, you can use the chat as well. Please, yes, Mansoor Ahmad, go ahead with your question.
Thank you very much, Khadija. It was a nice presentation, but I'm really very sorry I came a little bit late. This is Dr. Mansoor from Peking University. I'm here as a researcher, especially focusing on the climate change and natural disasters, more focusing on the vulnerable, which are the most perspective in the South Asian countries. So I have actually I came to listen your presentation a little bit late. So I have one question. First of all, to know that what vulnerable communities do you select and what basis do you select? Because when there is a flood, so the urban, rural peoples, they're also affected. The urban peoples also affected and the rural peoples. And what basis? Because in that groups, the affected groups, there are the huge people. So on what basis do you select and then give the funds, release the funds for them? And as you mentioned that your project is already based on the poverty reduction. And so what models do you use, and you give them just like funding to pay the to have their own small business, right? So I mean that there are still some drawbacks. That what basis do you select those beneficiary people? So I just want to know that.
Mansoor Saab, in our regular programming, what we do is the entire program is built around community mobilization process. So there are women groups that are organized at the smaller level, settlement level, hamlet level, and then they mature and federate into a village level organization. So the membership that is part of these community based organizations can avail the loans and also the contingent fund. But what we do is we additionally use the poverty scorecard of the World Bank to identify the poorest of the poor. Why? Because our the products that are available within the CIF are then based according to the ratings on the poverty scorecard. So those falling on the 0 to 11 score, like the really poor, they can get grants. Those who score higher than 11 then receive loans. Why? Because they have the repayment capacity. So it's very much, it looks at the wealth ranking, it looks at the poverty scores, and then based on that, the products are made available to the communities. In case of a disaster where the rich and poor are effective are affected, there's no difference between that, because floods do they're indiscriminate. So in that case, again, the nomination of the affectee has to come from the member of the community-based organization. Why? Because for us, it is the community-based organization that takes up the social collateral and says that, this is an eligible person who should avail the benefit. I know that we are really pressed against time, but still, if you want to learn a lot about our model, we can leave our email IDs here and we can connect even at a later point of time other than this webinar.
Okay. Okay, thank you very much. I have another question. Please, just 1 minute. Also, as here we mentioned that the climate risk. So what do you use, what techniques do you use to affect on the, who are the, just like in 2025, the people are affected already due to the flood. So what measures do you take to recover them fast as quickly as possible?
कैसे आप कहते हैं Mansoor Saab, if I've understood your question correctly, then there are certain things that this fund can address, right? Now, there are people who lose their homes, right? And they need to rebuild it altogether. Now, obviously, this fund is not enough to do the whole reconstruction process in a village. For that, the government has its own schemes. So we pick up ideas from the community that they need immediate help with, and help that is not coming from any other external source. So, for instance, if a poor household has lost its livestock, which was the basis of their livelihoods, that is something that the community-based organization can decide on and then provide support from the CIF contingent fund or the revolving fund to the applicant, to the affected households, to kind of revive their livelihoods. So there are certain criteria, there are certain bands that have been defined in consultation with the community-based organizations, and a few things that we've left out. Why? Because the government already does that, or that may not fall within the scope of the limited funds that each community-based organization has in terms of its CIF or the contingent fund.
Thank you so much, Nadia, for the very productive and interactive session. I think like we have a lot of questions from the audience, and please feel free to post questions in the chat, or as our speaker already mentioned, that you can reach out to them directly through email ID. But I have to stop the question answer round for this presentation now, as we have another presentation coming up. But before that, we would like to take a picture of everyone here for a minute. If you could turn on your camera, we would be happy to take the pictures shortly as well. Connor, would you take the picture or should I do it?
No, I can do it.
Okay.
Yeah, I'll wait a moment to get as many people to turn on their camera as possible.
Okay.
We would very much appreciate it. And yeah, I will continue talking until we're ready to do so. Okay, it looks like a good number of people, so I will do so now. Just give me 1 sec. Okay, looks like I got everyone, so thank you all very much.
Yes, thank you so much, everybody, for such an interactive session. I understand there is some internet limitations in Pakistan today, but thank you so much for joining us. So now we will move to our next presentation. We have Sana Ehsan here from UNDP, and she will be presenting on climate disaster risk finance and insurance implementation in Pakistan. Yes, Sana, please, the floor is yours. I would quickly share the presentation in a moment. Okay. Yeah. Yes. Can you see my screen now?
Yes.
Okay. Yes, Sana, please.
Thank you so much, Zabi, and thank you so much, colleagues. Assalamu alaikum and good afternoon. I'm Sana Hassan. I'm the National Project Coordinator at UNDP and looking after insurance and risk finance portfolio. And I'm pleased to be here today at this very important webinar. And I'm really thankful to UNU, EHS, Pakistan Climate Resilience Network, GIZ, and of course, GCISC. And I would like to share some insights on the CDRFI in Pakistan. So my presentation would be broadly covering a few of the concepts, the landscape, as well as some of the challenges we see throughout the CDRFI landscape. I might not be covering everything, so I'm giving a disclaimer in the beginning. So before I proceed, of course, we all know that the climate risks are intensifying and Pakistan stands at a very critical juncture at the moment. And I'll request Azabi to please turn on the next slide, please. All right, so giving you a little bit of context for the state setting. So Pakistan is the world's 5th most populous country with over 255 million people and 61% of whom live in the rural areas. And our GDP for 2024 was about 373 billion, and poverty has increased to about 42.4%, and financial inclusion is low. And only 16.3% of adults hold accounts at the regulated institutes. And in the overall GDP, agriculture is the main contributor and employs over 1/3 of the population. And yet we can see that from the other perspectives, the mobile penetration for digital innovations are not being leveraged for an inclusive insurance. That is one kind of insurance we're going to talk about later. And these indicators actually reflect the development challenge which Pakistan is facing right now, entwined with the climate vulnerability. Next slide, please. So this is just a glimpse of where Pakistan stands. And Uzabi also presented a brief picture when she started the webinar. And I'll just walk you through some of the numbers we have globally. For example, we're just the contributors of 1% of global greenhouse emissions, yet we suffer disproportionately from the climate disasters. And about 167 climate-related disasters have been experienced in Pakistan, with a $36.4 billion of damages and affected over 100 million people. Similarly, we have seen that the 2022 floods alone impacted 33 million people and cost about $15 billion in damages. And the 2025 floods estimations are yet to cover. This will be covering in the PDNA, which the government is intending to do in a couple of weeks. Next slide. This is just a list of some of the events which Pakistan has faced. This is not exhaustive, but of course there are some other events as well. This is just for the information that how many disasters Pakistan has faced. It's just not one disaster. Rather, there are like droughts, cloudbursts, cyclones, and some large-scale flooding. Next slide. So now let's talk about the disaster risk financing in Pakistan. Pakistan's DRM framework was established under the 2010 NDM Act, and which includes disaster risk reduction, response, and recovery. And DRR and post-disaster operations are being proactively undertaken by the National Disaster Risk Management Fund and National Disaster Management Authority under those guidelines. Next slide. And if we map some of the stakeholders in the public and the private DRF side, we see that there are multiple initiatives at the ex ante and ex post level, which are being taken by the public and the private sector. And this broad mapping shows that the public instruments which are included are best like Sehat Sahulat, catastrophic insurance for infrastructure, and yet the private insurers are also like underwriting the catastrophic insurance, the risks, and but the inclusive insurance, however, it remains quite limited. There is a need to scale both the public and the private instruments to close the protection gap. Next slide. So UNDP has supported the government of Pakistan, the Ministry of Climate Change and Environmental Coordination, in conducting the Pakistan Global Shield in-country process. Pakistan is one of the first country in the Asia and second globally to run through this process as one of the pathfinder countries. And as part of the process, during the stocktake contributed by different development partners and the government agencies, we explored that there are over 40 CDRFI related projects which are currently being implemented in Pakistan. And these are in the categories of micro, meso level insurance, disaster risk management and reduction, climate change adaptation, social protection, safety nets, livelihoods, and of course, climate risk financing. As Khatija also mentioned in her presentation, that most of these projects are funded or managed by the international development partners. That's very much right. And of course, there are collaborations at different federal and other agencies as well. And these programs are mostly contributing towards the CDRFI, and major hazards and vulnerable communities are covered by different development partners. Next slide. With all these, initiatives, still the protection gap remains, and we have seen that the economic losses, incurred during the 2025 earthquake, or be it 2020 floods or 2022 floods, the economic impact has increased variably from different, percentages of GDP. For example, you can see that only floods, the percentage of economic losses have increased from 5% of GDP to about 9 to 10% of GDP. So what the government is doing in order to, target the economic losses and also work towards addressing the different shortcomings and the vulnerabilities. So the federal and the provincial governments are basically retaining most of these large disasters, losses on their budget books. And the government is heavily relying on the borrowing from the domestic international markets and also setting up special budget lines and budget reallocations. So you can see that these kind of initiatives heavily impact the development budget, because the budget which was allocated for example, health, education, or livelihoods, or infrastructure development, and many other categories which are covered in the development budgets, will be diverted to address the impacts of the natural disasters. If I talk on the different lines at the provincial level, the provincial disaster management funds were also set up under NDM Act, but there are limited funds which are available to meet those post-disaster needs. And of course, there is a very low penetration of insurance, which is less than 1% of GDP. And regionally, if I talk, this percentage in other countries or combined in other countries is more than 3 to 4%. So you can see that where Pakistan stands in terms terms of insurance penetration. Next slide, please. Yes, so let me talk more about what's going on in terms of the systematic gaps and challenges when we talk about CDRFI. So on the regulatory and policy framework side, we have seen that the risk financing is kind of a secondary topic in most of the policies and the strategies. And overall, there is a disconnect between the sectoral policies and the climate policies as well. And if you see even the NDCs or NAPs or even the development plans, the integration of risk financing is almost absent. So these are the areas which need urgent attention from the government side as well as the development partners and other partners as well, to see that how we can integrate risk financing into these kind of regulations and the policy frameworks. Similarly, if you go to the institutional side, we have seen that the institutional fragmentation is there. There are multiple units or different kind of authorities who are working on different levels, but again, there is a fragmentation. There has to be a coherence, and there has to be, a very, systematic approach in order to address these kind of gaps. Next slide, please. So if we talk about the insurance sector, there are some regulatory barriers and there is restrictive microinsurance, landscape as well. And I will not go into detail on these sites, but there are some of the areas which can be improved. And since there are some areas, so therefore we are facing the challenges of product development and even the distribution challenges. And of course, there are some negligible inclusive insurance instruments which need standardizations, and there is weak rural outreach. Of course, the customer awareness and trust issues are also there, because when we talk about insurance, there are many aspects to it, including the religious aspects, and of course, the literacy, the financial resilience. These are some of the other areas which needs to be addressed as well. In terms of the gender and social inclusion, the vulnerable population or the groups, they also, lack the targeted financial tools, which need to be addressed. And of course, there are the ones who sometimes are considered to be the exclusion in the decision-making process. So their voices need to be reflected more in order to mitigate those systematic gaps and address the challenges. Next slide. So how can we forget some of the data side, which is actually defining or informing that where the investments should come. So some of the risk modeling or risk analytics which needs improvement or have the limited availability are the multi-hazard vulnerability and risk assessments. I'm not saying that they're not being done; they are being done, but there has to be some other areas which need to be covered as well, because unfortunately, Pakistan's hazard vulnerability is increasing rapidly. And there has to be some national level risk assessments which are inadequate at this time for local adaptation and the planning. The provincial agencies are also they have the fragmented data or vulnerabilities because every province has different contexts, has different vulnerability to different disasters. So it has to be done in that way. Of course, the work is ongoing, but it needs further interjections. There is also some inadequate integration of climate vulnerability data in the NSER for targeting climate vulnerable populations. Next slide. This is a summary of the risk models which are used at the moment for quantification of risk estimates. This information will be public soon because this is part of the work which we have supported in terms of Global Shield work, and some of the partners have contributed to it, for example, GRMA. We have seen that recently NDRMF has launched the NatCat model. I highly encourage the researchers and other people who are interested in learning that how some of the simulations can be run in terms of natural hazards should go to their website and see that how it works and what kind of models they're using there. And of course, there are some other models which are being used for assessing the risk estimates in Pakistan. Next slide. So what are the positive developments in terms of keeping this policy momentum? So we have seen that the 2022 floods actually triggered the discussion on the financial resilience. And that's why we have seen that at COP27, Pakistan was one of the 8 pathfinder countries for the Global Shield work as well. And there's a discussion on the loss and damage fund as well. Some of the climate change policies are being updated with the serious consideration about risk financing. Punjab and Balochistan, they have done that. And KP, they're also doing it in terms of the disaster risk financing strategy. There is one at the national level, which is yet to be made online, but we know that the main contours of the strategy, but of course, there has to be some regional and the provincial presence of these kind of strategies due to varying landscape of every province. And of course, then we are seeing that there is a growing focus on data needs, for example, the NatCat model, and the insurance industry and the banking sector are also showing willingness in expanding and developing new instruments, preparing to partner in terms of the CDRFI. Of course, the development partners like UNDP, Asian Development Bank, GIZ, the World Food Program, and many other agencies. They are working with the private sector and the government as well to strengthen the overall CDRFI ecosystem. Next slide. So now let's talk about insurance. I'm sure many of you may know about it, but let's walk through some of the benefits insurance can bring to the countries and the societies. If you can click again, please. Yes, again and again, like 3-4 times, please. Thank you. Yes. So previous slide. Thank you. So we have seen that the insurance is basically used to protect us financially from shocks. It powers innovation. We have seen from Khadija and her team's presentation as well, how it can power innovation like index-based insurance, weather-based insurance, parametric insurance, and many other instruments, which can be brought into addressing different levels of issues and challenges. And it also enables investments. It underpins resilient financial systems. Next slide. In a way, if you analyze, the insurance can work as a development enabler because it provides the financial stability. It allows government basically to manage its risks and prevents losses more efficiently. Remember the term I used as when the government retains it on its budget books. So it can create alternate sources to finance the impacts of the natural disasters. And of course, the households and businesses capacity also increases in terms of managing their finances and risks. And of course, it drives the financial security. Investment and development also increases when multiple sectors of the economy are involved. So you can say that the insurance can be used as a development enabler when the funds are used appropriately and different development partners and different other stakeholders are involved throughout the process. Next slide. So you must be wondering that how the Pakistan insurance sector works, or what is the right now, what is the landscape of the insurance sector? So honestly speaking, like it's not very huge sector. It has only like 42 insurers. 27 in companies are the non-life insurers, and there are 2 general takaful operators, 8 life insurers, 4 family takaful, and 1 reinsurer. And insurance penetration is less than 1% of GDP. UNDP. These are the recent stats, and if you're interested, you can visit the Securities and Exchange Commission website, where they publish the in Pakistan insurance sector trends, or the snapshot, on a regular basis. Overall, they are contributing, tremendously to the economy, like about $2.3 billion in terms of the gross premium support. And the trends are that 25% increase in the private sector life premiums. But again, when we talk about these numbers, there are some trends in terms of the climate and disaster risk financing, which needs to be highlighted. And this information is yet to be, given in a proper manner, because there are very, very few instruments which are contributing in this landscape. Next slide. So I was talking about insurance, and of course, there's a room to integrate CDRFI into climate policy as well. And there are certain benefits to it. And this piece of work, which is presented here in this slide, was contributed by UNU, EHS, and also MCII in collaboration with UNDP Insurance and Risk Finance Facility. And we have seen that if we integrate CDRFI into climate policies, NDCs, and NAPs, we can actually help the government and the other partners to manage climate risks comprehensively and effectively, because it provides a tool for risk management, and which is an essential element for climate adaptation, as well as the CDRFI should function within the broader context, because the strategies define the broader aspect of how things should be. And it also gives you a synergy, and it reinforces strategies and plans. And of course, making financing and implementation of climate policy can be made more actionable when you have CDRFI integrated into it, because you have some actionable items which can divert in different directions. And of course, the private sector should be enabled, and this is a way to enable them to contribute towards the climate policy, its implementation, and climate financing. Next slide. So in my next slide, I will be speaking about how CDRFI can contribute to the climate adaptation. And this is the same kind of work. And of course, I'm talking the same thing, but from different angles. So I talked about the climate policy first, and now I'm talking about the adaptation. So CDRFI integration can actually bring different stakeholders and groups together. Because whenever we talk about climate adaptation, there are different multiple, stakeholders who contribute to various, portions of where the adaptation is required. It mobilizes finances and secures investment. It can support those that are needed most. And of course, the financial liquidity and stability is also attached to it. Next slide. If I go to next slide, please. Okay, so now let me talk about some of the work which UNDP is doing in this space. So UNDP is programmatically present in about 39 countries and addressing various aspects. And it's uniquely positioned in terms of its global expertise and in terms of the country delivery. And there are many initiatives who are actually shaping the global financial resilience ecosystems. And there are multiple partnerships which are mobilizing action towards the CDRFI as well as the greater financial resilience. And there are many research and evidence work that has been produced, and different platforms have been, established in different countries as well as globally to facilitate the whole process. Next slide. So what is the theory of change behind the work which UNDP is doing at the moment? So we are addressing both the issues from the demand side and the supply side. For example, there are many initiatives which we are conducting at the moment at the country level to address, for example, the skills required for the insurance market, or the actuarial capacities which needs enhancement with the help of different partners. some regulatory work which is defining the inclusion of different CDRFI instruments as well as vulnerable people. Some support to the public policies as well as research work, market innovations through the inclusive insurance or insurance innovation challenge funds. Next slide. This is just on the previous slide. Yes, on this slide, you can see that there are multiple donors as well as technical institutions and partnerships at the global level, at the industry level, which is available with the UNDP's Global Insurance Finance Facility, who are working towards the financial resilience as well as CDRFI. So there are partners like Government of Germany, there is Biofin, there is Insurance Development Forum, as well as in terms of the partnership with the industries, there is Milliman, Munich Re, as well as Allianz, and many other partners who are contributing towards this greater goal. Next slide. So in terms of Pakistan, what is the work that is being taken up in order to improve the Pakistan's insurance and risk finance landscape? So we are playing the role, the convening role in building the long-term financial resilience in terms of supporting the regulator in digitalization of the insurance sector, as well as supporting the National Disaster Risk Management Fund in terms of integrating sovereign risk financing into the policy, as well as building the capacities in terms of CDRFI to the national and the provincial governments, and many other aspects which are covered under this program, which is defining the from the research work to the solution development and capacity development and enabling environment. Next slide. So far, as I mentioned in my previous slide, that what are the gaps and the challenges? And this is just a small contribution to the Pakistan economy, which this project has been providing since 2024. We have been supporting the Pakistan Global Shield in-country process as in-country support structure and conducted the stocktake and gap analysis of the CDRFI projects in support from the development partners and some other partners who have contributed variably to the stocktake and gap analysis, as well as developed a request for support, which we have submitted from the government side to the Global Shield Secretariat for the financial interventions. And some of the interventions which are the highlight of the request for support are the public assets, the parametric insurance, sovereign risk financing, weather-based index insurance, livelihoods, social protection, risk modeling, and some cat bonds as well. We have supported the digitalization of Pakistan insurance sector, a blueprint that actually addresses the fragmentation of data, which is which is there in terms of the insurance sector, which can help improve the sector in a very good manner. Of course, there are certain other initiatives that we have taken, and one such thing is a summary diagnostic report. If you're interested, you can visit the website and download the Pakistan Inclusive Insurance and Risk Financing snapshot in Pakistan in 2024. It actually provides you details on where the sector stands, what are the legal, institutional, and many other aspects to it, who are the key stakeholders, what is being done, what are the few products or the programs which have been launched, and where are the areas which can be addressed. Next slide. Similarly, in terms of the market development, it's very important that we support the insurance industry to grow and also build the capacities in the government side to understand what climate disaster risk finance and insurance is. Because what we learned through our interaction with different stakeholders is that there is a huge gap in understanding of CDRFI, because this is a pre-arranged financing, and what people tend to talk about is disaster risk reduction or climate adaptation or mitigation, but it's hard to differentiate between what CDRFI is and how they can improve the economy. So this is one thing which we have been doing and bringing in the international curriculum to educate the different stakeholders with our different partners. Similarly, with the support of SECP, we are also going to be launching an insurance innovation challenge that will be in the areas of the climate disaster risk insurance, digital innovation, nature and biodiversity, SME resilience, health insurance, social insurance, mandatory insurance, to see that if we can help scale up the existing solutions and give them the winning solution a grant of about $40,000 and help increase the number of beneficiaries and also address the vulnerabilities due to climate and disaster risks. And in October next month, we are also going to be launching a national inclusive insurance training program, which is again a global program which will be launched in partnership with the Institute of Financial Markets Pakistan, successfully being launched in Tanzania, Ghana, Nepal, and many other countries for improving the customer-centric inclusive insurance approach so that new products can be brought into the market. Next slide, please. So the future forward is digitalization. So this is the landscape, or just a glimpse of the landscape, which we see that in terms of insurance, that there are many actors and how the data fragmentation is in the economy at the moment. So there are some common stakeholders who are providing data to all the insurance companies and the stakeholders to, define their products and address the different challenges in terms of, for example, NADRA. So there are some brokers, aggregators, and there are some insurance companies who are the common stakeholders. And there are different insurance sectors which have different levels of data. But again, this is all fragmented and there is duplication. So we need to address all of these issues so that the SECP can also see that how many policies have been issued, which areas are being addressed by whom, and how we can actually improve the whole ecosystem. So in that terms, in my next slide, I will be presenting you a blueprint of the digitalization of the insurance sector. If you can go to the next slide, please. So this has been launched in July this year, and with the support of SECP, we have identified an insurance information bureau, which may be created in terms of addressing the data fragmentation and some other issues which are coming toward, which are being faced by the insurance sector as well as many other stakeholders. This is a blueprint which tells us that if there are different platforms which can be created in terms of different sectors, for example, a platform for the health insurance, a platform for agriculture and livestock insurance, a platform for microinsurance, a platform for motor insurance, and they can be, integrated towards a repository, and that repository to be housed at the Insurance Information Bureau, where the regulator can actually oversight the data can be collected in a well-structured and systematic manner to avoid duplication. This will not only help the public sector, but also the private sector to see that how they can improve, address some of the fraudulent issues, some other issues which can also be addressed through this kind of initiative. This is just the blueprint. Its implementation is yet to be undertaken, but this is some work in progress. And some development partners like Asian Development Bank, they are, addressing, because they are one of the largest stakeholders in terms of CDRFI related activities. They have a very big project and they may be addressing some of the key aspects of this blueprint. Next slide, please. So you must be wondering, after having this too much information, that what needs to be done. In terms of, there are many aspects when you talk about CDRFI. This is not only the private sector, but also the government, which needs to take the initiative. So when a disaster occurs, of course, the public infrastructure is also a major element which, gets destroyed. The roads, the bridges, the buildings, the schools, the hospitals. There are so many, infrastructure related, damages. So if the government can implement a compulsory catastrophe insurance for public sector, there is only one body, NICL, the National Insurance Company Limited, which is responsible for the public asset insurance. So we say that, okay, then let's have a compulsory catastrophe insurance, like financing opportunities should be explored around that, which is like, this is all about the public asset insurance and sovereign risk finance. There is an insurance element for public assets, but that is during the construction phase, and the companies can go for the hazards insurance or the fire insurance against fire or anything else, if they want to through NICL. But again, if you make it compulsory, then of course some of the burden from the government books can be shifted. And of course, if you can establish a contingent liabilities database, it can help come into standardized its total contingent liabilities as a consequence of natural disasters. Similarly, there is a need to strengthen the financial disaster risk assessment tools, which can actually be leveraged through the NatCat model and some other modeling techniques as well. And region-specific disaster risk financing strategies, which some of the regions are developing. But again, this can help in terms of the cost estimation and also funding the gaps. Similarly, strengthening financial capacities is one such area which needs to be addressed as well. And of course, the integrating insurance within the social safety nets, the social protection, adaptive social protection, this needs to be addressed and explored, and gradually, transfer liabilities from the government books to the reinsurance market. It's very important. Next slide. I've just mentioned some of the key messages which can be taken from this presentation. That Pakistan, of course, is at a very critical juncture. There are different, opportunities which need to be, addressed in terms of building resilience. Again, CDRFI is not just a financial tool. It's a strategic enabler for inclusive development, climate adaptation, and of course, economic stability. And there are multiple partners who can work towards bridging the protection gap and also empower vulnerable communities. CSOs can also play a very important role in bridging this gap between government and the communities. And of course, it's a call for action to let's collaborate across sectors to scale up innovation, inclusiveness, and sustainable risk financing solutions. With this, I thank you. And I hope you have learned something from my presentation. Thank you so much. Over
Yes.
to you, Sabi.
Thank you. Thank you so much, Sana. That was a very interesting presentation that you have presented us. Maybe we give like couple of minute break to Sana and we move to a Mentimeter round again because I think it was a very intense presentation and a lot of information. And also I see that a lot of participants want to know more about what is being done in CDRFI landscape. So if you want to learn more about CDRFI, you can also visit a UNU's online course that we have. You can find different materials there. You can also post your questions and have interactive discussions there. If you want to learn more on that side on CDRFI as well. There is the QR code and also the link. Yes, so with that, I would like to go again to the Mentimeter round. Okay, here is my screen, and once in 10 minutes we will go back to the question answer round again, and if you have more questions you can ask us. So if you have access to the Mentimeter, please give me a thumbs up. Okay, I can see people joining. Okay, so I think most of us have access to the link. So I would go to the first question. As we talked today, as we discussed about a lot of different implemented projects and what is being done in Pakistan so far to adapt to the impact of climate change, I have a question here. Is like no right or wrong question, but in your view, what do you think would be a challenge in financing climate adaptation measures in Pakistan? Yeah, you can, could it be the financing gap or the government budget or policies, whatever you think could be the challenge there? If you just could write a word: capacity building, government ownership, lack of funding, funding gaps, governance. So also some on policy side, budget allocation of fund, I understand. Yes, so definitely there are different challenges, starting from how the plans and policies have been formulated, how are the different instruments being implemented, as if there is like some funding that has been implemented in ex ante, that would be before the disaster happens, or most of the budget is being located, being assigned more on post-disaster funding, right? Yes. So we have a lot of perspective here from the audience. Okay, so if I move to another, if you give me, there is, sorry, just the screen. Yes. So we talked about different topics, which was inclusive insurance was also one of them. So from your perspective, what would insurance, inclusive insurance mean to you? So we have different perspective here from different different statements that have been posted. Okay, so just to summarize, inclusive insurance is just not about covering everything for everyone, right? Or focusing on certain groups, but it is specifically about making insurance accessible to people who are traditionally excluded, which would include groups such as smallholder farmers or low-income households, also including women in rural area. It can also be, it includes products like microinsurance, health, and such that we talked about today. So the next question I have is, in your view, which group should be the highest priority for inclusive insurance coverage in Pakistan? So if it would be farmers or small or micro or medium enterprises, something like MSMEs, or women from low income groups or rural areas, or informal workers. Yes, community members, women and youth, MSMEs. Okay, are we expecting more answers? Small scale female farmers, definitely. I think we also talked about in our first webinar the gender aspect and how poor people are affected, but the access to funding is limited to these certain groups. Okay. So the next question I have is, what do you think is the main barrier preventing wider use of insurance in Pakistan? So what could be the reason? So there is no right or wrong answer here. It's about seeing where different perspective lies in the room from the audience, or what is the urgent in the country may not be in the another country. So yes. Okay. So I see like a lot of people have answered on the affordability and trust towards the insurance implementation in Pakistan, also awareness. I have some answers in community beliefs and perceptions. Okay. And here is one more question in the context of Pakistan. What do you think is an important step in scaling up CDRFI? So be it data and risk assessment or linking different policies to CDRFI, institutional coordination. So there are different barriers that could be addressed. So here again, it's more about understanding the perspective from the audience side. What do you think could be a step to scaling up CDRFI? Yes, alignment. I understand it would be aligning it with policies and practices. Fragmented ownership. So the ownership should not be fragmented, I understand. Implementation. Finance. Interagency coordination. Finance. Okay. Improve trust, definitely. Easing procedure, definitely, that's also something that needs to be addressed so that there is not a lengthy process in implementing different instruments. Awareness, collaboration between different agencies or different financing groups could also be an option. Okay. Okay, so with that, this is the last question in the Mentimeter. In a minute, I would go back to the webinar and start the question answers round for our second presentation. I could see some hands are being raised, and also there is some questions in the question in the chat as well. Thank you so much for participating in the Mentimeter. Okay, so yes, so are we ready for our question answer? And if you are ready, then I would maybe start with, I see 3 hands raised already. In my screen, I see the first one is Mansoor Ahmed. Would you like to unmute yourself and ask the question?
Sana-san, thank you very much. It was a really nice presentation. Actually, here I saw overall overview of your project and what you are going to do and how you are doing. But I couldn't see any kind of results that what you have already done and how those insurances has affected on the communities and how those communities are working and how those policies are working. And I couldn't see any kind of check and balance. And based on this, you also proposed what challenges you have faced. But before, I think it was a great to show us the results, then you can propose your challenges and the policy recommendation. That would be more effective, I guess. So I have a question that where we can see the results of these projects and insurances policies, and Is there any insurance for the especially perspective for the agriculture and who has the losses of the crop and livestock during the floods and other things? Thank you.
So much, Mansoor Saab. Good question. So I presented the UNDP's work in terms of the insurance and risk financing. And we work with the federal government and the provincial governments in terms of improving the regulations, the policy side. We are not working on assessing or reviewing or even measuring impact of any insurance policies, which is out of the scope of the project. So this is one thing, like UNDP does not also conduct the check and balances. So this is also out of the scope of the project. And in terms of the affected communities, of course, we support the government in conducting the post-disaster need assessment. For example, the previous BDNA of 2022 floods was also conducted in close collaboration with the World Bank, the European Union, and the Asian and some other partners as well. And UNDP was one of the main partner who conducted the BDNA. And similarly, we are also working on we are starting to work on the 2025 floods BDNA. So so the overall thing which I want to mention is that the points you have mentioned are out of the scope of the work which UNDP conducts under its insurance and risk finance facility. And on your other question, in terms of the agriculture insurance, so the crop loan insurance program, which is led by the State Bank of Pakistan and the Ministry of Finance, is there from quite a long time. And I think you should see some online information available on these programs. These are called CLIS, the Crop Loan Insurance Scheme, and Livestock Loan Insurance Scheme, LISP. And these are the government-backed initiatives. We are not supporting them. There are different other partners who are working with the government and the State Bank of Pakistan. But generally speaking, in Pakistan, these are one of the schemes which are there in terms.
Hello?
Hello, can you hear me?
Yes. Yeah, I think today there was some internet issues in Pakistan, I understand. So I think um, we have some issues with Sana joining at the moment. Maybe I also see other participants who have raised their hands. If you would like, you can post your questions in the chat for now, or if you have any other, you can also present your view on what could be different in Pakistan that would help to scale up CDRFI until, yeah, Sana is here again.
My apologies. There are some internet disruptions. I don't know how much you heard which I spoke, but let me know if you heard about the crop loan insurance scheme I talked about, the livestock loan insurance scheme, and I hope it has answered your question.
Yes. We heard about the crop insurance and the livestock insurance. But what
you
I
so
think
much.
that if we do not have the check and balance of our any project of what we are doing, and if we do not have, then how do we know that our project is working well or not, or it is effective or not? I think you should consider this kind of suggestion for your next meeting when you are going to meeting with the stakeholder. Thank you.
Perfect. Thank you so much, Mansoor Saab. Well taken. Over to you, Zabi.
Yes, we have, I think, Shidi Aminika. Sorry. Yes, please feel free to ask your questions now.
Okay, yeah, thank you very much. Thank you for the insightful presentation. So my question is on the capacity building part and the modeling gap you talked about earlier on. So I'm aware that the UNDP and also the UEHS have some sort of capacity training program, for example, the Climada, which is meant to train trainers over there in Pakistan. So my question is specifically about the pathway from training to implementation. So how is the probabilistic risk assessment being developed by this national experts? That's the risk assessment that's been developed by this expert. How is it being applied to refine their parametric triggers, especially for the CDRFI scheme? And lastly, what is the biggest challenge in ensuring that the hazard and vulnerability data used in the model accurately reflects local conditions, particularly for the most vulnerable communities in Pakistan?
Yes, thank you so much. I think me and Connor can answer that question as we've been more involved in that aspect. So what we are working in UNU at the moment is the climate vulnerability risk assessment. So what we look into is how hazards such as floods and droughts or cyclones and so on affect different assets in any country such as Pakistan or others, and this would be impact of this different hazards on crops or livestock. And I think like today our presenters also briefly discussed on the risk analytics gap. So that's something we also plan to fill in by providing more like a quantitative data on what is the impact. So how many peoples are affected, what is the USD damage on agriculture or different other assets like livestock, hospitals, bridges, and so on. And how we do this risk assessment is using the probabilistic model CLIMADA that you are referring to. So this is more on the technical sides, and this is the model developed by ETH Zurich that we use for quantification of different impacts. And what we are doing on the capacity building part is training different trainers. I understand that's what you were referring to. So we cannot train everybody at the same time, but what we are doing is doing our best to train a couple of experts in technical field from Pakistan who will be trained in CLIMADA how to do the risk assessment, and we expect that this knowledge is transferred from our side to the country. So this experts would be from the country, so we train them how to use CLIMADA, how to do the risk assessment, which they would be providing this knowledge to further in Pakistan and any other countries or any other regions as they see fit. I think that was one of the questions from your side. There was also another question.
Yeah, I can take that up. It was
Yes.
on the triggers in the local context, how the vulnerable community can basically, addressed, or how they can pay the premiums or something like that, if I understand correctly. So, throughout the project life cycle, we have learned, and throughout speaking to different stakeholders, that and it's understood as well that the vulnerable community or the poor people lack the ability to pay the premiums. And so there are certain interventions which are required in terms of, some support from either the government or some other agencies in terms of subsidizing those premiums. And some part maybe can be paid out by the government or any other partners, and the rest can be paid out by the vulnerable community. But this is just an idea that how we can support the industry and the vulnerable community as well. So because we've also learned that number one, the ability to pay the premiums is very low. Number two, there is of course the awareness part, which is also very low. People lack the ability to understand the financial aspect because of the low level of literacy, the family setups, and also the community structures as well. And also there are, if I talk about insurance market, of course, there is low risk retention capacity. So these are some of the challenges which are there. And of course, it will take a lot of time to address these, because this is not one partner who is working towards addressing these ones, but it's going to happen. But because there are certain regulations which are needed, there are certain partnerships that has to be established. And I tell you honestly speaking, for the past 2 years, we have been talking to the government in terms of, bringing in the international capacities to develop a sovereign risk finance instrument. And honestly speaking, there are issues which also the government also understands, that there is a very low understanding of the insurance itself. And this is not where I'm talking about vulnerable communities, rather the public sector, because I'm talking about sovereign risk finance, sovereign risk insurance. So if you see that the level of capacities lack at that level, at the public sector, then what are the capacities at the vulnerable community level? So there is a huge gap. So this needs to be filled in. And this is not job of one person or one agency or one organization. Rather, this has to be carried out at a mass level, so that, with the passage of time, we were able to do these kind of things. And it's good to see that how the different partners are doing the index-based insurance and how the community is involved. I think this is one such example which Khatija also presented, that how working closely with the community, we can add to addressing some of the component or some of the shortcomings to these kind of instruments, and which can help the community understand which benefits can be brought to them. Thank you.
Thank you so much, Sana. We have one participant in the chat, Muhammad Afnan Khan, who want to ask a question. I think please
Yes.
feel free to turn on your mic and ask the question. And
Yeah. Hello. Thank you so much for the insightful presentation. It was very informative. I have a couple of questions, general questions. Sana, as you mentioned that Pakistan ranks 5th among the countries of growing population. If it goes in that level, Pakistan will rise to 4th by 2030. Don't you think that increasing human population are harmful to the environment directly or indirectly? So decreasing human population in the sense that the less population, the less CO2 exhaled to the environment. The less human population means the less factories to be manufactured, and huge number of population also lead to deforestation for urbanization. So you think that what steps and technical policies should government taken to maintain the population? My second question is that although the floods being the second most climate risk Pakistan is facing, as you mentioned that Pakistan lost $30 billion in 2022 floods. So do you think that what steps Pakistan government and non-government organizations taken to decrease this level? And why still floods happen in 2025, although $1 billion was lost in 2025 floods till now? Thank you.
So much. For the first question, it's about the population, and whatever is a threat is also an opportunity. So I think instead of looking the influx of population as a threat, we may see that how we can use it as an opportunity by building different levels of skills, by adopting to innovation, by using the youth bulge, which is at the moment very high. I don't remember the number, but there's a discussion on the youth bulge as well, which can be used in a very positive manner to address some of the challenges. There are a few things which are out of our control and also beyond the scope of this discussion we are having around CDRFI. But I really appreciate your concern on the growing population, and I think that there are ways to address it, but definitely it's not something which I can summarize in a way that it can answer your question. But again, I will really encourage you to see that how this population influx can be seen in a positive way to improve the economic activity and how we can use it as a benefit for overall, the economic activity, as well as in terms of, creating awareness, and skills and some innovation, and see how we can improve the market overall. Challenges will be there always. They have been there since we were born, so there has to be, some kind of way to look at them. And of course, the floods, again, this is what we have been advocating at the global arena as well, about the impact of the climate change, the impact of the greenhouse gas emissions, and the contribution which Pakistan is making and how it is being affected by different, calamities. And I think that's why government and different partners are advocating it at different forums. Like I mentioned about Global Shield, then there is again the Loss and Damage Fund. There are many other also, platforms where this has been highlighted at be it the UN General Assembly or any other, arena. So I think this is something also which is beyond our control. But what we can do is that we can adopt some of the policies and some tools which can address different levels. For example, mitigation, adaptation, disaster risk financing, disaster risk management. Again, there are different, organizations which are, working towards different mandates. So we can see that how we can adapt them, or how we can improvise and change them in terms of the increasing calamities. So those level of stakeholder consultations or engagements are, necessary in terms of address these kind of challenges. And I think at some point, these discussions are ongoing. So we'll see that how this will impact and create some kind of, impactful discussions and policies. Thank you.
Yeah, thank you so much, Sana. And thank you so much for all the participants who joined us today. And we are now at the end of our webinar. And if you have any more questions, you can feel free to reach out. Our speakers have shared their email addresses, and you can reach out to them if you have any further questions. And I would request you to kindly also fill out the survey so we can address some of your queries that you have in our future webinars. Yes, with that, I would like to say thank you so much for everyone and wish everybody a very good day. Thank you so much. Bye.
Thank you so much, Azabi. Thank you so much, colleagues. Thank you so
Thank
much,
you.
participants. Thank you. Thank you.
Thank you all.
Bye. Bye.